Of the day is SBI strong numbers. So Abhishek is here to tell us about what brokerages have made both on SBI as well as Bank of Baroda. Abhishek, over to you.
Well, Sonia, for SBI, brokerages are saying that there is strong show on all counts that SBI has given, and there is more to come in the coming quarters as well. So they expect further margin improvement, and brokerages have raised earning estimate for FY23 alone anywhere between 6% to 18%. So they expect SBI to deliver a 15% ROE over FY23 to 25. Best quarter in this cycle is one of the brokerages that have said an ROA can sustain above 1% even in H2 FY23. So the target price has been increased for SBI by brokerages to about anywhere between 680 to 805 now versus earlier target price of anywhere between 595 to 675. One of the brokerages, that is Nuvama, has actually upgraded their recommendation to buy from hold. Coming on to Bank of Baroda, brokerages say that it's a beat which was broad-based for the bank. They have raised earning estimate anywhere between 6% to 10% for FY23 to 25. A strong quarter with improving profitability trend is what brokerages are making of the number, and credit cost guidance by the management has been lowered by 25 basis points, now stands at 1% to 1.25%. So they expect re-rating of the bank to continue. The target price has been increased to 170 to 200 from the earlier target price of 140 to 180, and across brokerages they remain bullish on Bank of Baroda.
Okay, thanks a lot for that. That's clearly the stock of the moment. But on the downside, watch out for Escorts. The company reported its numbers on Friday, but there were a lot of brokerages that downgraded earnings estimates. Very weak quarter this time around. EBITDA down 33%. Margins have fallen over 500 basis points year on year. There's a one-time loss that Escorts reported because of an impairment of an investment in one of their JVs, and the material costs have gone up. Now, a lot of brokerages have downgraded the stock. CLSA maintains a sell, but they have cut their target price to 1561 from 1612 earlier. And JP Morgan as well has downgraded, stating that there is continued market share losses for Escorts, which is a big concern. More on that with the management in a bit. But in the meantime, we're also tracking SRF this morning. Sonal is here with the latest. Sonal.
Thanks a lot for that. Well, SRF in focus on the back of conference call details and also some brokerage notes that have come in. In the conference call, the management said that export realization in a major chunk of their product, that is refrigerant gases, has fallen from the peak by around 15%. But US pricing in this particular segment should remain strong going forward. They expect second half of FY23 to be very strong for refrigerant gas versus the first half. But packaging segment, which did not do well at all this time around, they expect weakness to continue with this particular segment. But in FY24, they can expect some relief if energy prices in Europe also come down. Overall, capex guidance from the company has also been cut down marginally to 3,000 crore rupees versus 3,100 to 3,200 crore rupees earlier. On the back of this, Jefferies has lowered their target price to 2,200 from 2,290. They expect margins to remain compressed due to energy prices and also because of normalization in refrigerant gas prices. MOSL has decreased their FY23, FY24 earnings by 5% and 1%. They maintain their neutral rating. Kotak Institutional Equities has cut FY23, FY25 EPS by 4 to 6% on the back of margin miss. So some reaction could be seen on the stock today.
Okay.